Job.
All right, meantime, the Cboe finds investors are shifting away from macro risks to single stock and sector risks. Mandy, the firm's head of derivatives market intelligence, is here on set with us. Mandy, great to have you with us. Happy New Year to you.
You too. Great to be here.
So the shift away from macro into individual stocks, is it still Mag 7?
It's not. It's actually, there's more sector rotation. And you saw today, it's actually a great example of that, right? So people shifting away from tech, going to some of the sectors that were maybe underperforming last year. I think that the best three performing sectors today were the three worst from last year. So you are seeing more and more rotation underneath the surface, more thematic plays away from Mag 7, away from tech into maybe defense names, into other names that are maybe underperformed recently. So we are seeing that, and we're seeing it in terms of volatility at the single stock level really picking up relative to the index. So that tells you people are more focused on these idiosyncratic risks.
How do you interpret the move away, the churn away from Mag 7? Do you see that as permanent? I mean, what are you seeing in terms of how they're positioning?
Sure. So we are seeing increasing risk being priced into the tech sector. So whether you're looking at the QQQ, the ETF, or we actually recently launched options on the Cboe Mag 10 index, which is Mag 7 plus 3 other AI stocks. And in both instances, we're seeing increasing implied volatility or expected volatility for the sector relative to, say, the broader market. So we are seeing that in the options market.
You know, Mandy, gold has historically been, if there's a downturn in the equity market, sort of a hedge. You're suggesting that maybe not so much anymore.
Yeah, so I mean, gold has been on a phenomenal run, right? Up 60+% last year. And a lot of people look at gold as a potential hedge to their equity portfolio. You hear it as, it's a safe haven, and especially after 2022 when people got burned with, bonds selling off in addition to stocks, looking at alternative hedges. And what we've noticed is that over the past couple months, gold has become actually increasingly positively correlated to stocks. So that correlation went from negative to positive. So it's behaving like a risk asset. And that matters, obviously. If you're holding gold for that diversification benefit, I would say, maybe reevaluate and look at other hedges potentially. But, there are other reasons to be bullish for gold. But as a hedge, I would say that is something that I would be aware of.
What's the newest product, the newest derivative that you're starting to see some traction off of? That's more of a sign of the times. Everything that we're talking about now, but is there something that sticks out to you as this is different from the past and people are migrating to that to hedge?
In terms of hedging, I wouldn't say it's necessarily new, but over the past year, 2 years, we've seen this huge rise in terms of option-based ETFs, in terms of the AUM being gathered. It's kind of the hot new product, even though the strategies embedded into these ETFs have been around for a very long time, and I think they've been very successful as a easier way for people to access options, right? So instead of learning about calls and puts, what option chain, what strikes, now you buy, it's a ticker, right? You buy a ticker, and that fund manages the option strategy on your behalf. And I think another reason why it's been popular, going back to the gold comment, is post-2022, people looking for other ways to hedge their portfolio. Options have been a really great alternative that people have looked at. So I think those two factors combined, we've seen this big growth in terms of the AUM in these strategies.
All right, Mandy, great to see you. Thank you.